More minutes. Let's wait since people are joining in.
Yeah. I think Sana, you could start. We've got some 30 plus people.
Yeah. Apologies for the technical glitch on. I'm not able to switch on my video. Hi, good morning, everyone. Welcome you all for today's webinar on auditing audit trail and backup requirements as per Rule 3 of the Company Accounts Rules 2014, which has been recently amended. This session is organized as a part of our internal audit awareness program by IIA Delhi Branch Women's Forum. And it's an honor to have you all join us today for this insightful and thought-provoking discussion. Audit trail being talk of the town since it has been amended and implemented by companies with effect from 1st April 2023. Now the role of the auditors came in, that how to audit this audit trail which has been in place. Today's session is an opportunity for us to learn more on this aspect. And the IIA Delhi Branch Women's Forum takes great pride in bringing together experts from the field of internal audit to share the knowledge and expertise with us on this very, very hot topic. We believe that this webinar will provide us with valuable insights that will help us in our professional journey. To give a theme address, I would like to hand it over to Mr. Amit Sharma, Secretary for IIA Delhi Branch. Over to you, Amit.
Great. Thank you, Sana, for this. And I'd like to thank, even the Women's Forum and the IIA Delhi branch for actually, talking about this very pertinent topic. While you said audit trail, typically is looked at as a very elementary aspect, but given, nowadays the focus of, regulations on this important aspect, it's very, very important to make sure that the auditor, today's auditor is actually ready to look at these things. Especially my professional career, I've seen a lot of times when we interact with regulators and all, not having or not doing proper due diligence around the audit trail and all has often led to quite some bit of, if I may call it, headache and observations later on. So it's very important that we learn or at least discuss how do we go about this very important thing. Now, audit trail, as I said, it's a very, very elementary concept. It's like auditing one-on-one, 101, the basic that you see. Now, what is an audit trail? It's essentially, just nothing where you can just take a transaction and trace it from end to the source. It just that whole trail that maintains that. Now, what it does is it enables an organization to track a transaction, say, for example, from a general ledger back to the source document. It's maintaining that particular thing. Now, also in the context of technology, it actually gives a complete trace of the transaction of, who did it, when was it done, what was done, what were the changes that happened. It gives you complete history and all about it. So it can be used, as a proper control. It is a proper control also, and hence the reason the regulators have also started to require or define laws around to make sure that auditors also can go about should be going about looking at it in a very effective way. Now, the whole audit trail, the need for all of this, if we can just go just a step back and try to understand what is the actual need for an audit trail. So audit trail effectively enables, business transactions, one with more transparency, proper monitoring and governance sort of a thing. It just helps to ensure complete transparency from a financial record maintenance perspective and reporting perspective. And there are obviously a lot of sustainable benefits to the business as well. You go about maintaining audit trails, it helps you maintain proper documentation. That's there. Businesses can then detect errors and then they can transparently do the rectification of that also. They can do root cause analysis of why this has happened again. And also, if you go about reviewing audit trails, you can also identify any abnormal activity that can be done on a more proactive basis as well. Again, so it can be a very important step in prevention and detection of fraud. Again, you can use these audit trails for a lot of analytics, especially going about monitoring what you can in the whole process, and it helps you gain a lot of insight into it, and effectively you can go and enable effective decision making by the management over there. The overall trust on the financial information improves if you have proper audit trails, etc. Around it. Now, today's topic is, on what an auditor should do, when they go about reviewing audit trails. Again, and that is the task where, our keynote speaker, Yukti, is going to be talking about. So without taking much time, let me go and introduce Yukti. So Ms. Yukti Arora is a partner with 𝐀𝐭 Consulting Services. It is a woman collaborative consulting firm. She's got more than 2 decades of experience in the field of process control, technology, risk advisory. She's a chartered accountant, a CISA, a DISA, and she's worked with both industry and consulting sides. So she's been on both the sides. She's led and managed several large system control, cyber, privacy advisory, ERP advisory, GRC implementation, process redesign, ERM, SOX, ICFR, design and implementation, RPA, third-party audit, and assurance. So she's got a quite large bit of portfolio that she's actually done and quite a bit of experience also. She's also a regular faculty with the Digital Accounting and Assurance Board and internal audit standard with the ICAI again, and she's also contributed in the development of internal audit standards by IASB of ICAI. In fact, she's also published several concept notes on RPA for ICAI, and has also contributed to several articles in ICAI and the IIA India Forum. Currently, Yukti is a BOG member of the IIA Delhi branch, and she is the chairman of the IIA Delhi branch Women's Forum. So with great pleasure, I would like to invite Yukti to come over and share and enlighten all of us, with this very important topic. Thank you, and Yukti, over to you.
Thank you, Amit, and thanks a lot for this introduction, and thanks, Sana, for introducing and putting this in perspective. So quickly, without wasting time, I will just go into the slides. So as we know, today's discussion is around auditing, audit trail and backup requirement, which is required as per the Rule 3 of the Companies Act 2013. So the agenda, what I am going to cover in this short, 40-45 minutes discussion, is what the exact requirement is and what companies have to do, and what are the internal auditors' considerations and how internal auditors should go about. And there are some myths also which we will be discussing and talking about in this entire session. And I would request, if whenever you have some question, you please keep on putting those questions in the chat box. I will definitely take each one of them towards the end of the session. And so what, like we all know, there is a requirement. The MCA notification came, in fact, on 24th of March 2021, which required the companies to have this audit trail as a requirement, but it got deferred, and with effect from 1st April 2023, it is now mandated that every company should have this audit trail, and next year even the statutory auditors are required to report around the same. So if we look at the notification, it clearly requires the companies to actually have those audit trails for each and every transactions which are maintained in an electronic mode, for the books which are maintained in electronic mode. So the important word is each and every transaction, each and every financial transaction, the audit trail needs to be there. Second important aspect which we need to actually understand and keep it in perspective is the requirement of edit log. What is this edit log? Anything which has what was there. If any changes has happened, then what new change has happened, who has made the change, when it was made, and what was the previous and the current value. So there's a need to create this type of log in the books, like for all the changes, edits which have happened in books of account. For instance, if we have some asset which was recorded at 10 lakh rupees, if we have changed the asset value to 8 lakh rupees, then this 2 lakh difference, this recording has to happen. Who changed it, when it was changed, what was the previous value, and what is the current value. That is, what was earlier it was 10, now it is 8. Who did the previous, who did the new one, when, the date, all these needs to be tracked and kept for the auditors, and it is for each and every transaction. And one another very, very important aspect which is there, that the companies have to ensure that these audit trails are not at all disabled. That means they are always enabled, and there is no tampering with reference to this, like in terms of enabling and disabling, or disabling or enabling, or any tampering with the log data itself. So these requirements are very, very important consideration, which the companies have to define and implement, and the auditors are required to actually report and certify. Now, in this case, the role of internal auditor is extremely important. They being the first thing, and this being the first year of implementation, the auditors, like internal auditors, have to take this, like every audit they do, whether it is a financial, non-financial audit, or whether it is any audit which they are undertaking. Definitely they look at these trails, audit trails, the logs, the information, etc. They have to go into much finer details of these things. And looking at the IT controls, which are now actually required, is one of the fundamental things. So planning and doing this IT general control, which is pervasive, which do cover these password management, access management, audit log management, that is now in a way required to be included in every audit plan, as well as included in specifically when we are looking at the audit plan which covers financial books of account. Now, to whom this requirement is relevant? Actually, it is relevant to all the companies, whether they are large or small, whether they are banking or insurance, whether they are in any industry, like whichever industry it may be, or even if it is a Section 8 company, then also this requirement is there. There is no like such thing that it's not required to a smaller company, or it is not required to the Section 8 companies. It is required for each and every company. And it is immediate. The provision has come into like being for more than a month now. And therefore, if some company has not like done it, it is an immediate like ask, they have to do it. And what happens is these logs should also be available, and they should be available on the reports and front end. So if these logs are not available, they are stored in database, or they are stored in some places where like auditors cannot verify. Again, that is an area which companies have to immediately consider and include. It is relevant to everyone who are responsible from the governance point of view, to the senior management who are responsible for actually making sure those processes and things are implemented, to the people who are actually doing the transactions, because now every transaction, the logs are getting generated and they are subject to review at much better and granular way, which is a very good thing for a good governance to be established, both from a perspective of companies as well as from the perspective of overall society, because they are like there's more responsibility. Everything is getting tracked, and it will be monitored, and it will be reported, and it will be verified and certified. So that is like there. So it's relevant to all the people who are within that organization, right from the governors to the people who are managing, to the people who are executing, to the auditors who are internal auditors who are the going to review, and to the statutory auditors who are also required to report. So every person, these requirements are applicable. Implementation window is now over. And in fact, it is implementation is there, and it is effective 1st April. And the next year, the auditors will have to report on it. Now, let us look at some of the auditors' considerations, because this is more from an auditor's perspective. So we will speak more towards that auditors' considerations, and specifically considering the reports because if statutory auditors have to report, then internal auditor also has to include them in the audit plan and make sure that this being the first year of the provision, it gets covered and it gets like as a part of overall internal audit plans as well. So since the statutory auditors have to report that the company is maintaining its books of account, which has a feature of audit trail, that means audit log, auditor has required to comment on whether it operated throughout the year. There is no like, unlike in the IFC requirement, it was like designed, it is operating effectiveness. Even for one day it is not operating, it is ineffective. It is not complying. So therefore, their auditors have to like see it operated throughout the year for every financial transaction recorded in the software. So you can't exclude certain transactions. You can't say that they are not relevant. If it is relevant, in the auditor for financial reporting perspective, it has to be there and throughout the year. The auditors also are required to see the controls which are in place, that it has not been audit trail feature has not been tampered. That means nobody has changed it. There is the access to enable, disable audit log is absolutely restricted, and they are configured in a way that they cannot be turned off. And the logs which are getting generated, they are in a form which it cannot be edited. You can't go and edit the audit trail. You can't like make changes in the values, like what was the previous value and the current value. You cannot change what was the user ID who did it, and you cannot change the dates. Like, so the entire trail feature cannot be tampered. That is something which auditors have to report. And the third important thing is that it is preserved by the company as per the statutory requirement. Now, this statutory requirement for record retention is like the year of implementation plus 8 years. So those like are the time frame for which log is required to be maintained. So in the first year, it would be obviously the first year itself. But as we go like down the line, so we'll have the responsibility of keeping that it is preserved, will keep on increasing, and it will be like for the previous like periods as well till it becomes like 8 years. So that is a requirement. And as an internal auditor, we have to like take a like make a more effort to educate our like various both the tech people, the IT side of it, because they may audit trail definitely requires lot of space. It requires lot of like like it will require storage, it will require various types of configuration, database, and all the capacity to maintain and manage those things. The budgets of IT needs have to be like looked at and discussed, and so auditors, internal auditor responsibilities to like both like bring this point out, highlight those things, and make sure these things are properly defined, implemented, and also look at the policies and procedures which are around it. Ensure that there is a governance which is around it, and these features are available throughout the year. The access to it is properly defined. The people who are having admin access are restricted. The various aspects of like making sure that the users' IDs are not shared, all those aspects the internal auditor will have to look and report on. And because it's something which is extremely like critical, first year being transition, like this year being very like the year where people will also be understanding and implementing. I do expect first year there could be certain places there could be a qualified opinion around the same, but it is with gradual time, I think this will be improving. It's a requirement of a law, so there is no compromise. Persons like companies have to implement it, and auditors have to review and audit and report on the same. Now, to do it effectively, one needs to very thoroughly look at what is the definition, what does the term audit trail actually means. Audit trail or edit log is a visible trail. That means it's not something in an encrypted form or in some form where nobody can read and understand what it was, right? It is a visible trail of evidence, right? Right from tracking from start, like till the entire transaction of enabling what was the original input value, what has been changed, when it has been changed, who has changed it, what was the previous value, and what is the current value. And this entire trail, as I am repeating, it should not be like tampered with. Like nobody should have access to tamper. Many a times what happens is these things may not be available on the front end, and when you abstract it for the review, they would be abstracted in a format where it could be changed. So it's auditor's responsibility to see that these abstractions are done in the front and they are not at all changed when they are submitted to them. So the IPs, looking at those like things becomes the information provided by the entities, the accuracy, the completeness, and the logic, like how it has been defined and getting captured, all these things becomes relevant. And this audit trail will be audit like an information provided by the entity or reports which needs to be like covered as a part of the internal audit plan. And obviously the stat auditor will also go ahead and review these things. So the records which are required to be maintained may include following information: when the changes was made, like the date and the time. The date and the timestamp is one of the fundamental thing. Then who made the change? The user ID. See, what happens is many a times, specifically in certain ERPs, they are generic user IDs. They are IDs which are like shared user ID. They are IDs which are not by the name or individual. They are with like a department name or a function name or a location name or a shift, like depending on the type of process, maybe sometimes the process name also. Now, again, like with this requirement coming in, it is very essential for a trail to be effective that you can track which person, which ID has actually done that thing. So these like generic IDs and all those things may not be an option now, right? If they are used, then they have to be mapped to an individual person. They have to be a record to be maintained to that, like which person is responsible and accountable for that user ID. That needs to be there, because audit trail, one of the requirement is who made the change, who was the person, so that the accountability can be established. So this is one of the very, very important aspect which one, like as an internal auditor, we need to be understanding and pointing out. Then what data was changed, like what was the transaction reference number or the document number, and what has changed exactly. And if there has been some success or failure, like then that record also needs to be available. There are multiple source types of like softwares. There are various types of information which may be available. So one needs to look at it. Sometimes the information, the reports may be available on the front end. Sometimes the data is captured in the database layer. So if in case it is at the database layer, then we need to ensure that audit trail is enabled for each and every database like table where the financial information is getting stored, where the master data is getting stored, where the transaction data is getting stored, interfacing details are getting stored. At all those levels which are relevant for financial purposes, there we need to make sure that audit trail is there. Another important aspect which we all of us needs to understand as an internal auditor, when we do this like audit of this thing, this is applicable for those accounting softwares, right? Now, what is this accounting software? Accounting software is any program or system. So even the Excel, right, it's also a computer program. So audit trail is like applicable over there as well. It's the program or system that enables recording, maintenance, and reporting of books of accounts and relevant ecosystem. So any like program which enables you to record, maintain, and report, all those things are covered in the purview of the accounting like software that you are generating and maintaining records in Excel. There also you need to ensure that these features are there, and like you have to see how the companies have to implement this feature. But those are one of the very important things which are required to be taken into consideration. Now, they would be like certain systems which are like, because the requirement is on the financial books of account, the books of account used for reporting the purposes. But there is sometimes people misinterpret it, or there is a thing that it is only like applicable from where the trial balance is generated and financials are getting generated with respect to balance sheet, profit loss, cash flow, and all those like things. But no, that's not the right interpretation. As for me, and also as per the guidance note which has been issued by institute, actually the requirement is to look at the source, like if a financial transaction is generated in some peripheral system, in some other softwares, like for instance, if fixed assets are recorded out, like in some other thing, you record it, and in over there you are processing it and putting a depreciation in and all those records, and then making one consolidated entries in your financial system, that also becomes part of a recording from an audit trail perspective. Similarly, on the sales side of it, if there are some POS system, or if like in e-commerce, there are some different systems where like an system where you are recording all the sales, etc., or making certain purchases and recording those things, and then one at the end, one consolidated entry, a summary entry is getting posted. The audit trail requirement is there on those like peripheral sales and purchase system or as well, because they form inputs for the purpose of this thing. If you are maintaining a master data which is outside like the system, because many of the elements of master data are captured when we are doing a transaction. Like for instance, if a vendor master, like you are capturing the the details of the GST, the bank accounts and all, and they flow in your accounting software for the purpose of various like filings, for the purpose of their processing of the payments, and to like transfer or remit the amount to their account. So that becomes a financial like relevant information. So their master data system also need to have those audit trail enabled. So one has to have a very, very clear understanding of what all constitute the accounting software. So it's a responsibility of the management to identify them. And as an internal auditor, we also have a responsibility to see that management has correctly identified all of these like systems, all of those things, and they are like making sure these provisions are made are implemented, and they are covered as part of this entire requirement, because it's a legal requirement. Now let us look at this books of accounts. What is the meaning of books of accounts? So if we look at the definition which has been given by the Companies Act, Section 230, so it includes all sum of money received and expended by the companies and matter in relation to receipt and expenditure. So every payment, any receipt you make, which gets recorded in your books of account, all are forming part of your books of account. All sales and purchase transactions of goods and services are part of the books of account. All the assets and liabilities of the companies are parts of books of account, and any other like items of cost as may be required under Section 148, which belong to a class of company which has been defined under that section. All these things forms books of account to in a sense, like if we look at it like every transactions where there is like a debit and a credit entry, they are like part of this books of account to be considered. Any transactions which forms the basis of debit and credit entries, whether it's sales or purchase or assets or liabilities or money received or expended, all form parts of my books of account. So the other important consideration which we need to like consider is that audit trail feature should be throughout the year. Like it is like very, very important. This word throughout the year, it's an operating effectiveness which is like covered and for every transaction. And the second important thing is the configuration log. See, one of the elements with the auditors, internal auditors have to very, very specifically look is that these like nobody has disabled the audit trail. So we have to see whether these configurations are there, and it is configured in a way that it cannot be disabled by anyone. If like it can be, there is a maker checker which is there, like somebody has to take authorizations and then only they can disable. There's a trail control which exists over there. And there is a configuration like where nobody can change the details or the data which is from a backend or from front end or from any source. That one needs to check. Then the another very important requirement is that this requirements will require to have a cost, because maintaining the log, maintaining the data requires space. it requires manpower to manage and monitor those things. And also it requires the company to have some expert to ensure like what we are having a right set of like things. And also it's a control and compliance requirement. So there is a cost of management time, as well as like the various auditors and all those like things. So it will be one of the important factor which the companies have to take into consideration. Then they have to be a consideration for review of the log. So it's not like that we have enabled and the logs are getting generated. Somebody has to review it. Otherwise, it may or may not meet the requirements. So one has to regularly see whether those records are being preserved, they are being kept, they are getting properly captured, nobody is changing those details. So that log review parameter should also be implemented and defined and reviewed and monitored on a regular basis. And these things are punishable, which are fine, which is like prescribed. So that is also one consideration one need to look at it. Now coming to the backup, like backup also has been like backup requirement. In fact, they are not like to be covered the next year. They are requirements where the auditors are reporting the current financial year, because they became applicable in the month of August from like date itself when the notification came. And the requirements are very, very clear. Like earlier, the requirement was that the backup should be taken on a periodic basis. Here, the requirements makes it very specific that backups are taken and kept on the servers physically located in India on daily basis. So it's a matter of concern for those companies who maintain the books of accounts and backups on cloud, which has like not, and the cloud service provider do not have storage in India, or the cloud service, it's a multinational company wherein the backups are centrally taken and stored outside India. So they are like the things where they have to really take into consideration this aspect. And because the requirements are very, very clear under the Rule 3.5, Rule 3, subsection 5, that they have to be taken on daily basis and kept on the server physically located in India. And if it is in cloud, then the location has to be of the cloud storage has to be within India. And they have to file this like thing also. So that's a requirement on the backup side of it. So now what exactly the companies have to do, and then I'll come to the auditor's perspective specifically. First of all, the companies have to have these policies and procedures and guidelines for audit trail, and clearly define who will be responsible to maintain, monitor, and ensure the compliances of the same. Secondly, the companies have to identify what constitute an accounting software. They have to check all the financial entry data points and make sure that they are, if it is forming part of my, like as per the section 213 of Companies Act, if forming part of books of account, they need to be covered in this requirement of audit trail. And they have to identify all the records and transactions where this trail needs to be defined and captured. Another important requirement is they have to ensure that this trail is enabled and it is configured throughout the year. Then the fourth requirement is that they have to ensure and maintain this like edit log, and if any changes have happened, the trail should clearly say the date, person responsible, current and previous value. Many a times the software may lack the audit trail functionality. They must immediately seek a solution and migrate to a software which has this log. And if they are planning to move or upgrade to a different ERP, or they were wanting to change to a new accounting softwares, or they are like in a transition from one software to another, they have to take into consideration how the audit trail requirements will be met, because they will have to maintain the trail for throughout the year. So these are some of the important things which companies have to do. And then in the next slide also, there are some others, like they have to make sure that the configuration settings are available. if there's change in the configuration, that report is also available and somebody reviews that. They have to ensure that they are well-defined people who monitors these settings on regular basis. They have to make sure that there is a record retention of this audit trail and it is totally uneditable and retained for a minimum period of 8 years as required by the Companies Act. There is a process of regular review by the appropriate management personnel, and there is a segregation of duty specifically with the person who is recording it and the person who is reviewing the audit log. So these types of things they have to cover. And on the backup side of it, they have to ensure like there are policies of backup. There is a counting software which is like ensuring the availability of backup feature. There is all the success and failures of backup logs are enabled because auditor generally look whether the backup was successful on daily basis or not. So these logs need to be available and it should operate throughout the year. Then they have to ensure that the backup is daily made on regular basis. And if it is on SAS or some outside India, they have to make sure that the data or backup is available in India location, either through taking a copy of it or making sure that they have a like maybe they can implement a DR and they can replicate the entire data over here. But as far as the company's books of account are concerned, they have to ensure that the data is totally available, backup data is available on daily basis in India location. Now, what auditors have to do? First of all, they have to see it's a management which is responsible for doing it. But auditors have to see, first of all, management has identified what constitute books of account. They have to review that what softwares have been brought into the perspective of it and whether if something has been left or not. If they have something has been left, they have to highlight it, point out and make sure that it's like covered within the purview. They have to ensure that all these softwares which are financial books of accounts have the audit trail feature. They have to check and make sure that each and every transactions are getting captured. So they may check on the sample basis, the audit log feature, verify the details are getting properly captured, like date, person who is doing it, previous current value. They have to ensure that it was not disabled. And if it is disabled, proper reason and justification and review is there. And within that period, what alternate procedure was there, that is clearly captured. And the reasons for it is properly captured. Sometimes there would be a system which would be down or some problem would be there or the capacity would have exhausted. So all those reasons, justifications, various aspects need to be properly evaluated and documented. Then the log retention needs to be very well defined and they should check those logs are being retained as per the requirements of the Companies Act. So they need to look at the design and implementation of audit trail. They have to ensure the controls with respect to audit trail features that they have not been disabled. They have to review the governance aspects of audit trail, that whether they have well-defined roles and responsibilities. There are some person who are reviewing those logs and those people are not the people who are doing the transaction. They are used, no generic ID, named IDs are used and the IDs are getting properly tracked who are doing those type of transaction. Configuration changes are not allowed, and if allowed, then only and only to the administrator. And all those logs are maintained of if any configuration changes happen. And then there has to be a control that backups and audit trails of backups cannot be disabled. And if somebody has an access, who has the access to those features, and they have to ensure that the backups are taken. The control exists that backups are taken. Of backup policy, they are and required to ensure that the backups are physically stored in India and the logs of same are available. That success and failure log should be available. If for one day the backup has failed, somebody should be responsible for rerunning and making sure that backup is successful during that day. Because if it's unsuccessful, then the requirements of daily backup may not be fulfilled. Then they have to also ensure that people are looking at the configuration of backup. They are regularly reviewed, and those, like, nobody can change those configurations specifically by of their being stored in India or the location being changed. But and this is more important for the SaaS-based like softwares. And also the backups are retained as per the requirements of Section 128 of the Act, which says for 8 years, right? So these are some of the things. Now there are certain myths like which are there. Some people feel that they are using they are using homegrown softwares, or they are using some softwares which are very small ERP, and they may not be able to comply with the audit trail requirement. It's not like that. It is actually, this requirement is a combination of the process, the people, as well as technology going together. One has to define like what all is there and ensure those things are properly captured. It is very cumbersome to keep a law which is like in a manual way, but still there has to be a mechanism, and it can be implemented in small ERP. There are plugins which are available. They are like every data could be stored in a data. You can store it in a database, ensure those logs are available at those like things. So it is not, it is a myth that it cannot be implemented in small ERP. It can be implemented. On the contrary, it is also a myth that if we have a ERPs like SAP or Oracle or all those things, we are complying with the audit trail requirement. No. Yeah, because in those systems also there is a configuration. You can always you may configure to not keep a log. You may disable the log. There are features where you enable or disable. You may disable the log at the database level. You may disable at an individual table level. You may disable at an individual like logs or the account level also. So one has to review and ensure that it is enabled at all the table levels which are financially relevant. So in both the cases, it requires analysis. It requires management to first of all understand what is accounting software. It requires the companies to make sure that they understand what constitute books of account, to identify what books, records, information they need to have for this audit trail and the backup requirement, and then go ahead and configure this like thing. So over here, like I'll take a pause, and it's already like 10:50. So sorry, 11:50, and I would like to answer the questions. So you may post your questions. So one question has been raised by Udit. In some cases, entities using software which has audit trail facility, however, trails can be altered. In those cases, what should be done? Is the disclosure of same is sufficient? An entity should use a better software. So you are right, like there are softwares, like, and as I mentioned, these reports generally are stored sometime in the backend, and you can extract these information in a format which it can be altered. So in such cases, first of all, the extraction has to be done in our presence. And in case we are clearly like seeing that these trails can be altered, somebody can alter these trails, etc. In such case, we need to have a proper disclosure and ensure like the companies implement a process, implement a mechanism that these cannot be altered at all. Sometimes this would require dual control. Sometimes it will require them to enable logs over the log to ensure that nobody has disabled this type of thing. So that is the way one can deal with it. Okay, now one of the question is, if the data is on the cloud globally outside India, should the backup be stored in physical server? Yes, it is a requirement of the Act now. So it requires that the data should be stored in a physical, like in the location which is in India. It may not be like a server which may be located, it could be a cloud, but the location should be India. The storage location should be India. what if auxiliary, 𝐀𝐮𝐝𝐢𝐭 has written, what if auxiliary software does not have audit trail feature? Will it be violation and qualified by the auditor? Yes, if the auxiliary features or auxiliary softwares, the data which they are capturing are so relevant and they form input for the financial information, definitely audit trail needs to be there. If not, like they have to be brought under the purview of audit trail feature, and otherwise it will require the auditor to report about the same. How do we validate if somebody disable audit edit log and make some transaction and enable the audit edit log, whether same can be validated? This is a very good question, Amit. So so you have to enable the configuration of edit of audit trail. So in SAP and Oracle and these like large ERP, there is a feature which is available. In SAP, there is a PAHI table, which where you can check like when if any log or any change has happened in the system parameter. So Oracle also has that like setup and all those like things from where you can see if any changes has happened to the parameters, audit trail or any of those logs have been disabled, and from there you can get this thing. But yes, the smaller application do not, I don't know, may not have these type of feature, and that needs to be discussed and considered while reporting. How do you define accounting software? Sujit has written, let's say organization is using SAP as an accounting software, but there are other softwares like payroll. Is this clause mandatory for payroll software or good to have? It is required. If payroll is significant, it forms part of my reporting. It's covered in the definition of books of account. It's covered in the definition of expenditure or payments which have been made. So definitely we need to have this included. Many times payroll processing is outsourced. So in that case, if we are taking or relying on the third party audit report, we need to check whether they have covered this feature of like of checking this control of audit trail and they have reported on it, and then we may decide to rely on those. So yeah, any other question anyone has? Please feel free to write. In case of litigation, will the organization get penalized for destroying of data called for the regulator, which was destroyed after retaining beyond the period of 8 years? So see the if specifically it has been required as per the requirement of the act to be retained or under some aspects of things to be retained. And in case of litigation, they are required to be retained. So company must retain those documents and sometime beyond the period of 8 years. Any other question anyone has? Okay, so Sana, I would like to hand it over to you now.
Thanks, Yukti. It was actually a wonderful session. Hope all the participants get more clarity in how various issues can be addressed in auditing the audit trail. And you have busted the myths as well. We hope that you found it informative and engaging. On behalf of IAA Delhi Branch Women's Forum, I would like to thank all of you for being present today and contributed your time which helped making it a great success. We truly appreciate your willingness to share the expertise and insights with us. The depth and breadth of the knowledge added significant value to the discussion and helped enrich everyone's learning experience. Today's session is the beginning of the Super Success series organized by IAA India Delhi Chapter Women's Forum. Let's see you all next Saturday for the next session on ESG roadmap, data collection and materiality perspective. Hope you will you are already enrolled for the next one. And in case if you have any suggestions for future sessions, we would like to take a feedback from you on that. You want us to take up any specific session, we'll be happy to have your thoughts and ideas for conducting multiple sessions, which is useful for all of you. Thank you all once again for being here and staying with us till end. Thanks a lot.
Thank you, everyone. Thanks a lot. Thank you, everyone. Thanks.